Good morning, good afternoon, or good evening, depending on the part of the world you're watching this YouTube video from. I'm Bearable King, and I'm here once again to share the weekly review of what I'm expecting from the market for next week. Next week being the 11th to 17th of June. Now, if you have been following this channel, you know that I focus on pounds USD, euro USD, and gold USD. Please don't forget to click on the like and subscribe button and also set up the alert for information. You could also follow me on Telegram at BearableFX, and I'll be able to provide you with real-time information during the trading week. But for now, let's dive into the charts and see what happened last week and what we'll be expecting this new week. All right, my favorite pair to start with is the gold USD, and as you can see right here, we had an upward movement here, and after the upward movement, the market came to this trend line and it started a form of range. Now here we can see the market gave an equal high. Okay, an equal high was given here, so it is possible that we would probably have an equal low. Okay, now the good part about things like this is it's an indication that the market may either continue in its direction downwards. As you can see, the market came down here, pulled up here, from here came down here, tested it here, and came down here. So the first point of interest right now is that the market will move all the way to this point, which is around 1982. Then from here, the market could either pull down or break above. But if it breaks above, we would expect the market to pull back here, then we'll continue the upward movement, at least to this previous high. Okay. But if that doesn't happen and the market pulls back down here, then we may also have the market break below like this, then pull back. Sorry, then the markets may pull back to this point and then maybe move down. But for now, what the market is showing us is we have an engulfing bullish candlestick here and a slight pullback here. So for now, the first move next week we're expecting would be that the market should pull all the way up to 1980. Okay, this is on the daily time frame. Now going to the 4-hour time frame on gold, we're expecting an inverse head and shoulder, but what happened was the price came lower than expected. However, the market is still within range for an upward movement. Why? If I apply my Fibonacci from this high, from this low to this high right here, okay, right now I can see that the price did a nice rejection around 79 fib level, which means that the price has the capacity to move all the way to this high point, which is around 1995. If I apply this trend line, it means that it's going to create a new high somewhere around here. And if this happens, then the price may as well pull back to this point and then move all the way up. But as you can see here, the market dropped really low here, almost touching the 89 fib level point. So I'm not really expecting the market to break this point initially. However, what I'm expecting right now is that this same trade or this same market may pull back a little bit to this support zone and then move up here. When it does this, I'm expecting it to come down a bit to retest this point, then maybe after this break this point. Okay, so I'm going to extend this a little bit longer. So I'm expecting a move like this. Now you'll be wondering, why am I expecting it to come down to this area, which is around 1954? It's quite simple. It's really because we have a support here. Okay, aside from this support, we have another support here. Aside from this support, we have another support here. Aside from this support, we have a support here. And aside from this support, we have another support here. And also, we have another support here. So, I'm expecting, or I'm anticipating, that the market may still come back to retest this area as a solid support level before moving up to this point of resistance. Okay, before moving up to this point of resistance. Let me mark the resistance point for you to see. So we have resistance here. We have another resistance here. We had a resistance here. We had another resistance here. Okay, so I'm expecting that most likely this price would come back to 1954 before moving up to 1981. Okay, so if you're going to trade this pair, I'll probably indulge you to wait to see a reversal candlestick pattern here for an upward movement towards 1981. That's roughly about 400 pips thereabout. Let's see. Oh, sorry. That's about 237. Okay, 237 pips. Oh, 1954. Yeah, 1954. So I'm expecting the market to move up here. Then if you get a rejection, then you can sell down to this point. And then from here, we can be looking for the market to break above this level. And when it breaks it, if it breaks above it, we'll wait for a pullback to retest it, and then we can take another buy. Okay, so looking for a buy here, look for a sell here, look for a buy here, wait for the pullback, and then take another buy all the way to the stop point. Okay, and beyond. So this is my expectation on gold, but for this week I'm looking for an opportunity to buy then sell. Then from here we can push upwards. Okay, for this week we have news. Okay, we have the inflation rate that will be on the 13th of June. 13th of June will be on Tuesday. We have another news on the 14th. That's the monthly price index, I think. All right, then we have press conference FOMC on the 14th. I believe that will be on Thursday. Let me check it out. Okay, so we have that. Then we also have retail sales month on month. That is on Friday. Then the next news would be 16th. I think that's a Saturday or so. Hold on. Okay, so the news so far should help propel the market. Basically, when it's time for the news, you have to be careful to make sure that the news does not take advantage of you. Okay, so we had the move down here, bounce here, bounce here, breakdown. It has broken above it. It has created a new high when you compare this high to this high. Now we're expecting it to come here, move up, come down, then move up like this. Okay, we know that here we have a range. So if this price should break above this point without touching this bottom, we know we have a double bottom setup for an upward movement. All right, so that's what we'll be expecting on the daily time frame. If you remember, I said that this month was completely bullish. So in my own opinion, I would suggest that you pay attention and take advantage of the market. We spoke about we spoke about British pounds, American dollar, a while back, and we said that we're expecting that the price would move up from this point because it has broken this level, meaning that we had a double bottom here. We had the market do 1 2 3 4, and what happened? The price came here, ringed a bit before we went above, came down a bit and did what? Gave us an upward movement. So now it is obvious that this price may be ready to move all the way to the top here. So in my own opinion, I would suggest that you should always be looking for opportunities to buy. Now going to the lower time frame, on the 4-hour time frame, if you watched the video for last week, I mentioned that I was expecting this price to come to this area of interest and then move upwards, which was exactly what happened. The price came here, gave a push, pulled back up, retested this place properly, and did what? Started moving up. Anybody who took advantage of this trade should have made roughly about 180 pips on this trade alone. Just a trade would have given that much pips. All right, so what am I expecting for this week? I'm actually anticipating that this price, before we see any pullback, this price should move all the way to this point. Now, the reason why I'm expecting it to move all the way to this point is, one, I love using Fibonacci to know my retracement level and extension level. So I can see here that there was a nice rejection at 70.5 fib level, which is the optimal trade entry point, and my anticipated point before any major reversal will be around here, which is around 1.264. 1.264. So if I see a rejection around here, I'll be expecting that the market may come back to retest this trend line. Okay, and to retest this trend line, what I'm looking at is I'm going to adjust this trend line a bit to accommodate this move. Okay, say something like this. All right, fantastic. So I could expect that this market will move all the way to the top here, then from here maybe come somewhere around here before moving upwards again. Okay, now because the trend is bullish, I wouldn't be encouraging people to take this trade backwards, but if you take it and you make money, good for you. We can see here what happened here was this resistance was broken, turned to support, and the market started moving up, which means that there are a lot of bullish pressure in this market. So first things first, this market should come up here before we would see any significant pullback. Okay, once we see this significant pullback, then we can look for a buy entry somewhere around here for an upward movement. Now if I'm looking for my buy entry for my next long move will be somewhere around here. Okay, somewhere around here. All right, somewhere around here. So I'll be looking for a buy entry somewhere around here. Where's this? Okay, 1.250. So I'll be expecting a bullish move from here. If I apply my Fibonacci, that should be maybe around 61.8 fib level area, or 50. Okay, so it's around 50. So we may see a buy from here, and this buy is actually going to move for a long time. It could move as much as 1.29. Let me see, hold on. So if wishes were horses and I'm right, and we may see a move like this from here all the way to this point, which is 1.29. I want to go and check the daily. 1.29 is still somewhere around here. Okay, so if it comes here, then we may see the price pull back before moving up again, meaning that this level has been broken. Okay, so this is the level here. If I'm correct about the 1.29, which is somewhere around here. Yeah, so I'm just explaining what I'm expecting mid-term and long-term from the market. So I'm saying it is possible that this price may move up this way. If it does that, then we could see a pullback like this, and then the market does what? Move up. So this is what I'm anticipating long-term. But on the shorter term, I'm expecting the price to reject this 1.26 and come back around 1.25, 1.249 before moving upwards, and that is on GBP USD. But for now, let's wait for this move to be done. If you see the rejection and you want to do a counter trade, that's your choice, but the best choice is to trade in line with the trend. As you can see, the trend right now is an upwards trend, so I'd suggest you wait for the market to come around this trend line, look for a buy and take advantage of the market, all the way to the top. Okay, finally, for Euro USD, we had this, and I did mention that it is possible for this market to come back up here or somewhere around here and then move all the way down here before we expect an upward movement. Let's assume that this move is correct, and when I was younger in Nigeria, we used to do something that we call rule to the answer. So I'm doing something like that right now. Fantastic. Now, based on, if I'm expecting this price to come here to give me a double or equal low, because we have the price here bounce off, come here, but this is a whole move. All right, then the market came down here, tested this point, and I'm expecting that the market is going to touch this point, but we have a rejection here. This rejection should pull up towards 1.0997, then from there drop all the way down to 1.0529 before we can have an upward movement. What am I saying? I am saying that based on this candlestick pattern, this trend line has been broken. As you can see, this is the daily time frame. This trend line has been broken here, and because the trend line has been broken here, we can see a reversal formation around here. For that reason, we can anticipate that this price will pull up to test this point, then from here test this new low, which is actually an equal low. Then we may now see an upward movement beyond this point. Okay, I'm going to remove this now so that it will look more clear. So we have a case where this trend line has been broken, but a new low hasn't been created, and most likely a new low would not be created. So we may see the market pull up to this point, which is roughly about 200 pips from here. Then from here we may see the market take a deep dive from this point all the way down here, which is roughly about 450 pips, and from here we may see the market move back up almost immediately before we can expect a breakout from here, or from here we could see a break below, then we'll be looking for sell, meaning that our bias has changed. Okay, on the 4-hour time frame, all right, so we had this, we had, what did we have here? We had what's it called, we had the divergence here, and after the divergence a new high was created, which was an indication that the price was going to go upwards. I'm going to apply Fibonacci now, because most of the time we tend to get lost and we don't understand why the market made some moves. So as you can see from here, the market came to 70.5, came down below, and it still kept this new low, which was around 70.5 fib level, but it dipped a bit within 70.5 and 79 fib level. So what now happened? The market now did what? Pulled up from here, and from here you can see it has created a new high, meaning that the market still wants to go up. The market could come within this range of 1.081 or 1.083, which is roughly about 20 pips difference, so it really doesn't count. Now what would we be looking for here? We have this, we have a low, we have a high, we have a higher low and a higher high. What do I mean? We have low here, all right, we have a high here. We have a higher low here, and we have a higher high here, which tells me, okay, we are on an upward trend. Okay, this is a weak upward trend, but still an upward trend. So all I'm going to do right now is to join here to this point and see what the market does. Okay, so what could happen here if I extend this low here, right? This market may come this way and then do what? Test this point before pulling back here, somewhere around here, and then moving higher. Okay, so we would be looking for buys somewhere around 1.07 to 1.813, and then from there we'll be expecting the market to range, pull back a bit, and then move up properly so that we can take trades and then write the sell down in line with the daily time frame. Okay, as I gave last week, I will tell you straight ahead. For me, I would be more focused on gold because gold is highly volatile. Gold does not waste time. Gold moves as it wants to. So once I see a rejection here to buy to the high, I'll be looking for a buy on gold. Gold will give me what I need. I don't need to trade all the pairs at the same time. I don't need to get my capital stocked in a market that wouldn't move. So we may see a gold buy. So if I see this, this will be my main focus for this week. All right. Aside from this, this pounds movement also looks like a good one. Um, if I take from here to here, it's about 60 pips. Alright, I probably wouldn't take this because it's quite low. This market can still pull back to this point before moving up. There's something that they call imbalance somewhere here. So this market can actually come down here before moving up to this point and then range before coming down or something. So it's not the best place to enter. The best place to enter would have been last week around yep, 5th of June. 5th and 6th of June, that would have been the best time to enter this trade to the stop point. So right now I wouldn't really be focusing on this. And euro is like that pair that I don't really like trading or trade if I'm training people how to trade, because one, it's slow, two, is controlled highly, is less volatile than gold and the others. So in order of preference, I have gold first, then pounds, dollar, and euro, dollar. Okay, so this comes to the end of my weekly review, and I hope you're able to learn a thing or two from here. I, if you have any questions or inquiry, just look for me on Telegram at Bearable FX, and I'll be there to address your inquiries. I have a Telegram channel, Bearable FX Free Signal or so. You could search for it, you'll find me there. Come on board, learn a few things, take advantage. That's where I post the chats that I'm doing midweek. And don't forget to click the subscribe button. And I hope to see you guys next week with more capital, because you should have made profit this week. Bye bye.